morning, good evening, good afternoon. So we've got a lot to chat about. It's been one hell of a week, a few weeks. I didn't do Outlook. I think last week, I believe I was just out doing some business. But yeah, it's been one hell of a week. Obviously, we had the Trump winning the US elections, which resulted in an aggressive push on dollar, aggressive push in the stock market, in crypto, just all in all, euphoria and excitement with the idea of Trump being good for the markets. But of course, we don't know how his policies are going to actually impact the markets. We can only assume, but assumptions are quite positive. So firstly, let's begin with the XY and the dollar. So we are still in a very strong bullish trend. So since we've been rallying from September, we have been maintaining these daily EMAs, bounce from them and still holding this bullish trend. So really and truly, there's nothing to expect. Well, there's no reason to expect bearish dollar until we do get a break in the structure. So for me personally, I am still bullish dollar until something changes quite drastically. We did have FOMC and the US interest rate decision as well, in which they cut their interest rates. So from, I believe, 5% to 4.75% range. And that led to a further rally on the dollar. So even though it was a cut in rates, which is bearish for a currency, it was more of a dovish cut due to the comments from Jerome Powell in saying that they're not worried about inflation. They think that the growth in the economy is fine and that things are all rosy and dandy. So with that being said, dollar is still bullish. So you would ideally be looking for inverse sells on risk on currencies like EU and GU for now. So if we do move on to EU, we see that again, start on the daily. We briefly popped above the daily EMA, so briefly popped when it was just before the election, and then once the results got digested, we pushed straight back down. So we are maintaining this bearish trend that we are seeing. So personally, I'm looking for sells on EU. We could see a run back up into these highs over here, or even just a 4-hour over here as well. But essentially, what I'm looking for in the new week is to see price pull up one from there, or pull up and one from here to continue the downwards trend into this low over here, in which is weekly sell side liquidity. We do have a very bearish engulfing weekly close. So again, those lines of interest, we could see the weekly candle form as a pull up into there and then continue lower. That's the general idea on EU. So I'm just simply looking for EU sells throughout the week. Nice and easy. Now, GU, likewise, I did have a short entry given to my group over here through the 4-hour IFVG on GU, and that played out for them. I couldn't capitalize on it personally, just due to some bad execution, but it was still a very clean trade, and we are still leaning towards being bearish on GU as well. As we see, we are still holding these daily EMAs to show that the daily trend is still bearish. Nice bearish daily close as well. Weekly, not as bearish as EU's close, so we see how the candle body is still hovering around previous week's candle body close as well. But of course, the trend is still bearish, to ideally see a run lower into these lows over here, similar to what EU is doing, with similar entries as well, where I'll be looking for either a run up into this high to run lower, or potentially run that high one more time in the IFVG, which is less likely, but of course anything can still happen. But yeah, essentially zooming a bit more on the 1 hour, I'm looking for again one up of this high here, continue lower in line with the high time frame trend. That's that. Now, when we bring it over to the JPY pairs, so JPY, so GJ itself is still bullish, so we are still holding this bullish trend in itself. So I am still looking for GJ longs. We have recently on Friday swept this 4-hour sell side liquidity here, and maintaining this one as well, bounced above. So ideally I'm looking for a continuation higher, so something that could form as a further sweep of this low here, push, and then continue higher. Again, nothing is guaranteed. It can still push lower as a retrace, because if we now look at the other scenario, we had a very bullish monthly close, but we could still potentially pull deeper into the monthly candle before continuing the rally. So we could easily see GJ run a bit lower into this daily swing low here before running higher. But I'm not here to predict the future. I'm just here to play the trend and the setup. Trend is still bullish. If I do see my 1 hour setup or 4 hour setup on around these lows here, then I'll take it. If not, then I'll potentially wait for the retrace lower and then wait for the setup to form. Now UJ, likewise looking for longs. So look at the daily, bullish structure on the daily. This aligns well with the XY, which is also bullish. So bullish dollar, bullish UJ, ideally looking for longs from this area over here. So we have a down close candle on the 1 hour. We swept liquidity, pushed up aggressively. Now on the retrace, I'd like to see a bounce from this area over here before essentially continuing the trend higher. Now UJ is very bullish. If you also look on the monthly sweep of this monthly low, aggressive push higher. I'm seeing this as an inverse FEG on the monthly, but again, we can pull lower into it before continuing the high time frame trend, of course. So we can only be careful and cautious with the entries. But for now, I am looking to buy this should it give me the trigger once market opens. And then before we move on to gold, we'll just quickly hover at JPY itself. So JPYX, bearish trend, traded at the daily EMAs, daily buy side liquidity up here as well. So general ideas for these highs to get ran before continuing lower, which is again in line with the UJ and GJ bias as well. Right now, JPY in itself likely to continue its bearish trend due to fundamentals, where any hikes in the interest rates are likely not to come until the new year. So for now, I think we can still hold this bearish trend into the new year until the Bank of Japan start to hike rates again. And once they do hike, as what we saw with the unwinding of that Japan carry trade, we could likely see a bounce higher and then change the trend. But that is for the new year. When it comes, we will deal with it. Okay, cool. So next is gold. So gold seems to be breaking out of this rally. The higher time frame trend is still bullish. We are still in a very clear pulling higher uptrend. But in the short term, we are seeing price currently trading below the EMAs, so we could see a further one lower. So me personally right now, as we have a inflow into the dollar and a risk on appetite in the markets due to Trump winning and just the elections being out of the way, we are now seeing a outflow from gold. So gold is a safe haven asset. Safe havens tend to rally and do well when you have uncertainty in the market, and that uncertainty was being given through the elections. Now that those are out of the way and we know what is going on, outflow from gold likely to reprice lower. I would like to see this high get taken, so we've already pushed aggressively away. If we can now look at these highs over here, I'm ideally looking for something to come into here, give me a setup like that, and then one lower. That's the general trend or idea on gold for now. So I'm looking to play the outflows due to the change in sentiment. So ideally, potentially run into all these lows overhead that we had created back in October. So this cluster of sell-side liquidity could be quite a nice target to reach. So again, looking for price to take out these highs, sweep it, and then ideally run back to these lows overhead. Likewise, very similar scenario with silver as well. So silver, another commodity, outflows, bearish trend, more bearish than what gold is looking like. If you look at the weekly candle closure already, we've already closed quite aggressively twice. So we could easily look for price to run back into this weekly sell side here and this weekly FEG as well. If I mark it up for you right now, that is a weekly FEG right here. So similar to what I'm looking at for gold, I'm looking for price to run up, take out this high over here, and then pull lower, something along those lines. So again, outflow due to the change in the narratives on the macro landscape, and as we're seeing these large aggressive moves pushing away from it, price can likely pull lower. People are also taking profits. So if you look at silver, it's been running higher quite for some time now. Same with gold. So these outflows can be also seen as people and investors taking profit from the positions who have been invested for some time now, and now we can see some easing in the price in gold. And then lastly, we have oil. So I played a long, so let me hide this quickly, I'll bring it back shortly. So I played a long on oil, which gave me some profits in the week. That was closed out now, and it looks like we're looking to start pulling lower. So if I look at the daily here, we've taken this daily buy side over here, pushed aggressively. We have a engulfing daily candle over here, now closing below the EMAs on the daily as well. So price could likely be looking to go lower. Then if we bring it on the 4-hour time frame, swap this high, swap this high, aggressive ones lower, with same color candles showing aggression and the FEG as well. So I am looking for oil to ideally ideally pull up higher into here and then one lower. So if I bring back up the short position, that is essentially what I'm looking to play for oil into the new week. So oil sells. Right now we haven't had any updates in terms of geopolitical tensions. So tensions tend to make oil move a bit erratic, but right now there doesn't seem to be any new updates, so we could easily see a outflow in oil as price runs lower. But again, that isn't confirmed. We could easily come to these lows over here, sweep it, and then bounce higher again. So it all depends on how price behaves during the week. But for now, following the trend, following the general bias, we do seem as if price can quite simply look to run lower and take out these lows over here at these clusters. So we will see how that plays out. So that's the general gist of things. Before I move on to crypto, we'll quickly touch on the fundamental news to come out for this week. So if I drag this over here, so we have a bank holiday on Monday. So tomorrow is likely to be a non-trading day for myself. Then we got some labor market news for the pound. The UK has been doing quite well in terms of maintaining the labor market and just the economy in general. So GBP has been holding some strength. This could see that rally higher that I wanted to see on GU before continuing lower, but again, we'll see how the days play out. We've got some FOMC members speaking on Tuesday. Not likely to do any major impacts, but still worth to note their own biases. And then the important one is CPI on Wednesday. So CPI right now is forecasted to come in at the same 2.4%. Ideally, for dollar to continue its strength, if CPI comes in higher than expected, that would mean a further slowance in the the cutting cycle by the Fed, and that will be strong for the dollar. So if CPI comes in strong, dollar will rally. If it comes in weak, dollar will likely fall as well, as that gives more emphasis on the Fed cutting rates and dollar easing as well. So two scenarios based on CPI. We'll see how Wednesday plays out. And Thursday we have PPI, similar context, higher PPI, higher dollar, lower PPI, lower dollar. Very simple. And then we also have Fed Powell speaking in the evening. Key comments from there will be highlighted, so I will see what he says, and if he's gonna make any mention to monetary policy. It's unlikely, seeing as he just spoke at FOMC last week. I don't think he's gonna say anything new, so probably won't do much there. And then Governor Bailey is speaking at 9 p.m. as well. Then Friday, we've got GDP for the UK, and then some retail sales data for the US on the afternoon. So that's that. Main thing to be highlighted is Wednesday, really. CPI and how the dollar will react to will be the key driver. Now, move this out the way. Now let's move on to crypto. This has been it's been a very, very interesting week in crypto. Of course, BTC new all-time high. We've just kissed 80k today. The bullish trend is holding. Everything is green and loving it. Markets are looking great. Now, I am of course a crypto bull. I have quite a large exposure in the crypto markets, so this is all happy days. But we have to keep our excitement and euphoria contained. It's fine to be happy that things are rising because we have obviously been waiting for it for a while now, but we have to always keep a logical and clear and calm mind. So BTC, obviously, we've broken higher. If we look at the daily EMAs, they're just passing the previous all-time high right now. What we want to see is a weekly closure above the previous all-time high. This will be good for us. And then we can likely expect a pullback to retest the all-time high before we really continue higher. This may not happen. So we may close and price keeps running higher and higher and higher, but that is now further danger and more reason for you to be aware of a potential pullback into the all-time high level before going again. This range that we were in from March, we've been in this range all year. We're now breaking out. We could easily have an aggressive explosion higher, which is fine, but be careful of any pullbacks. The pullback will be good and healthy, but just be aware that that could be a scenario to occur. It may not, and we may just keep rallying and rallying and rallying, but we want to be careful and cautious with our entries now. Some people have been sidelined because they were afraid of jumping in when things were red and panicking. It is what it is. Don't now come and chase the pump. There's no need to chase the pump. Pullbacks will occur. It's crypto. Things pump aggressively and they also drop aggressively. You will get another chance to re-enter. I personally don't buy BTC because of its high valuation, but other coins like, let's say, Solana. Solana is breaking away, likely to pull lower if we take out these highs over here. So if we break it down into the monthly, we are now at monthly buy side liquidity. Yeah, we'll see how the weekly candle closes, but a pull away from here is very likely. Again, it may not occur, but if we look at, for example, the EMAs, we could easily see a pull lower into here before running higher. And of course, we have all these down close candles in here as well. So we could easily see price retest there before we're going higher. It does not have to happen, but it is a scenario to consider. And if you have missed a good entry, please don't chase it. You have to live with the scenario and the idea that you may have missed a move, but other moves will come. Things are looking great, but let's not get too carried away just yet. This is a lot of euphoria and excitement from Trump winning and looking for the bull market to continue, and it may do so, but keep your risk tight and keep everything managed. Right now, things are looking great. So, for example, let's look at Dogecoin. I've been chatting about Dogecoin a whole lot in the group chat and the community in general because of the Elon Musk trade, because of the meme coin trade. So Dogecoin is the number one meme coin in terms of NCAP and ranking. Is a number 7 or number 8 ranked coin. It's likely due to run to its all-time high. This is one of the first coins which have taken out their previous highs made in March/February of this year. So it's looking really good. So on Dogecoin, ideally, I want to see the weekly candle close above the March high. And if we do, we could see a retest before continuing the launch higher. Meme coins right now seem to be where the volume is at, so approach them with caution, but I think this cycle diversifying your allocations in crypto will be quite key, with a mix of utility coins, so coins who may have some value to give, and just general euphoria coins like Dogecoin, meme coins, just to catch those hyper aggressive moves in case other coins lag behind. But that's the general play right now. So crypto is doing well, everything is fine. Just please be cautious. Dollar is still bullish. I'm going to be looking to continue playing the dollar trend whilst looking to short EU and GU as the week progresses until something changes and until there is a new narrative to push. So right now, elections are done. We have a new president in the White House. I'm currently writing a newsletter to explain where markets could go and how they could react after these few weeks and months of excitement. But yeah, things are looking good. Risk on. There's plenty of money to make. Just be cautious. Don't jump the gun. Keep your risk tight and manage your emotions to ensure that you're making the best choices for what you can do. Okay, let's have a great week and I'll catch you in the next one.